JUDO is a brand new income ETF, and there isn't a single video about it on YouTube. It's already returned 12.22% since launch, beating the CBOE S&P 500 BuyWrite Index by over 4 points. And you are about to be among the very first people on YouTube to hear about it. JUDO ETF doesn't cover its whole portfolio with calls the way a lot of these funds do. Janus Henderson calls it opportunistic and tactical, writing calls selectively rather than across every position. And that's the JUDO move, using the market's own force instead of fighting all of it. In this video, I'll show you exactly why that 4.47 point gap is showing up, how JUDO's call writing strategy is built to lean into market volatility instead of avoiding it, and the one number buried in this fund's own numbers that tells you whether that outperformance is something you can trust or something you should watch prove itself over time. By the way, if you're new to the channel, I wanted to welcome you. I have a degree in engineering and also used to work for the hedge fund industry, specifically in investment research. So I'll be able to give you a pretty mechanical perspective on how these income ETFs are constructed. And that is the focus of the channel, covered call and income ETFs. If that's of interest to you, make sure you subscribe so you get more content like this. And let me put out a quick disclaimer as well. This information is for education purposes only and not meant as financial or tax advice. So please consult with a licensed financial and tax professional before you make any investment decisions. And also note that past results are not a guarantee of future ones. Here's the part I want to say up front calmly before anything else. JUDO launched on March 24th of this year. That's not very much time of live trading, and I typically have a personal investor rule that I have to see a fund with at least 1 year performance before I personally invest in it. But having said that, I'm definitely watching this ETF, and I wanted to let you know about it before anybody else did, because it caught my attention. I also wanted to say that this fund is pretty small. It's under $7.5 million in assets. That's also a personal rule that I have, in that I typically want a fund to have at least 100 million in assets under management. And I want you to keep those things in the back of your mind for everything that follows, because everything I'm going to talk about moving forward is pretty impressive, and impressive but young is a different thing than impressive and proven. Janus' own performance page shows JUDO's net asset value return sitting at 12.22% since inception, against 7.75% for the CBOE S&P 500 BuyWrite Index. That index is the standard yardstick for this whole category. It works by holding the S&P 500 and systematically selling a call option against the entire index every single month. No exceptions, no judgment calls. Now let's do the subtraction between that and JUDO's return, and you get 4.47 percentage points of outperformance in about 4.5 months. Now, if you're already holding something like XYLD, this is the number that should get your attention, because that fund is also built to systematically cover its entire portfolio, which caps upside consistently in exchange for a smoother, more predictable premium income. Now, a gap like JUDO's over such a short window doesn't prove a strategy works long term. What it does prove is that JUDO is not behaving like a typical covered call ETF. Something about how it's built is letting more of the market's upside through than the benchmark typically allows. And that's worth understanding before you decide whether this belongs alongside what you already own. Which brings me to the mechanism, and it's where the fund's own name, JUDO, actually tells you something true. In judo, you don't meet your opponent's force head on, you redirect it. Janus Henderson's own product page describes judo's strategy as opportunistic covered call writing on select portfolio holdings. What this means is the fund's manager, Jeremiah Buckley, is not writing calls across the entire portfolio like a lot of income ETFs do. He's choosing position by position where to sell that income and where to leave the upside open. And that's the judo move. Instead of capping every stock gains to collect income everywhere, judo only caps the ones it decides are worth capping and lets the rest run when a stock is showing real strength. Here's why that matters. For the numbers we just looked at, option premium gets richer when volatility rises. A fund that writes calls on everything all the time collects that richer premium everywhere, but it also caps every winner at the same time. A fund that writes calls selectively, like judo, can lean into the positions where volatility and premium are highest while leaving its strongest performers essentially uncapped. The core portfolio itself is built the same deliberate way. 50 to 70 dividend-paying U.S. companies selected through bottom-up analysis for revenue growth, earnings growth, and rising dividends, not just high yield for its own sake. And that selectivity on both the stock side and the option side is very likely the reason the gap exists. It costs a little more for that active management. The expense ratio sits at 0.55%, but 4.5 months in, that cost is being earned back several times over. Judo's current distribution rate sits at 5.34%. That's a healthy number on its own, but a distribution rate only tells you what the fund is paying out. It doesn't tell you whether that payout is sustainable. Now here's the number I actually want you watching going forward. Whether judo's NAV return keeps climbing alongside that 5.34% distribution rate. If the NAV growth flattens while the payout stays high, that's the fund quietly handing you back your own money. Now, if it keeps climbing, that strategy is working the way Janus Henderson designed it. And I'm going to be tracking that exact question for the next year. I will be checking Janus Henderson's own numbers every quarter, not through a third-party site. And if you want to see updates on judo, where it actually stands 6 months from now and a year from now, subscribe. That update is coming, and judo definitely is an ETF that I'm interested in, and I'll be taking a close look at. If you're interested in taking a look at another newer income ETF, this one focused on SpaceX, take a look at the link here. Thanks so much for watching. Have a prosperous rest of your week. I'll see you on the next episode.